Hey everyone, hopefully you're having a good day. My name's Andy. My channel is Finding Value. Today we're going to look at the overall stock market. We'll take a look and see what it's doing. Again, it's good to look out the side, the side mirrors of the car, or out the windows, I should say. Look out the windows and see what's going on around us. What I have said throughout the channel, and it looks like it's sticking to it, is we are going to have a commodity surge or move higher. We are going to have increasing interest rates, and we're going to have a headwind for stocks and technology companies. They're going to have a headwind going against that interest rate increase. So they're going to look like they're going to go down. They may, from a big picture view, they look like they're going down now and then consolidate in a very big, long consolidation pattern. How long? 8 to 10 years is my guess, from top to kind of the side. And then those market conditions have to change for a little bit, and then they'll break out of that consolidation period and go into a new bull market eventually. But that's, again, 8 to 10, 12 years out, so somewhere in that range. So we're going to look at the overall market. I'm going to go over the 10-year yield in dollar just because that's important, as interest rates basically price everything. It's a derivative. Everything else behind it's a derivative. Like the stock market's a derivative of the bond market, which is the interest rates. The interest rates price assets everywhere, and inflation has an impact on interest rates. But we'll look at the dollar anyway. Let's dive in here. We'll take a look at it. This is the dollar. The dollar's been strong. It looks like we're going back to do this retest move, and we could even go up to this white line up here if it breaks all the way up. I don't think it's going to break that big white line. I mean, it could, but we still got a little ways away. And in the beginning of expansionary phases, it seems like the money rotation strengthens the dollar. That's what happened last bull market. In the beginning of that expansion phase, it got stronger. This is the strengthening, and then we hit that big resistance white line up there, and then it became weaker ever after that. And here we are heading on higher. We broke to the downside of this. This is a decently strong support line that it broke to the downside. Resistance if you want a stronger dollar. And now we're coming back testing that. So we'll see if that line holds. The 10-year yield continues to go higher and work its way up. And here we are. I got the line going here. We break above that. We're in another new kind of uptrend move. So that means higher highs and higher lows. And an increasing interest rate environment does not do well for stocks. So I've got rising rates, declining rates, and new shift to increasing rates after it broke out of its downtrend line. Is it the new shift? Is this a new paradigm? Are we at the bottom of the market for interest rates? And have we hit that bottom, a capitulation bottom in the year 2020 in March and April, and just past that big bottom? And it could be a bottom. This is a inverted head and shoulders pattern where this likes to move on higher. Stocks don't like that. They don't like higher interest rates. They've already priced in super low interest rates. That's how they have their PE ratio so high. That's why it's so high. And I talk about this on the website, and I'm just going to step in here. The website does have a lot of value because you can actually read it, and you can see all of these different articles written about this stuff, and you can go through it multiple times. And I've got all the pictures and everything laid out, where I think it's easily understandable. So we've got this higher interest rates. Let's see what the stocks are doing. Now, it doesn't mean that the stocks will just go straight down. They're going to bounce. They're going to have their pause points and support lines and all that stuff. Here's the S&P 500. You can see these consolidation periods where this is an expansion phase of real estate and higher increasing interest rate environment, and this is your sideways movement. This is your consolidation period, and then the bursts between the consolidation periods. Expansion phase of real estate, expansion phase of real estate, and we went into an expansion phase of real estate with higher increasing interest rates. Does that look like it's a little bit bearish? Yeah, it does. Sure, it does. Let's go to the 1 year. Let's use our technical analysis to see what this thing is going to do. We're looking for large down days and small up days. Well, here's one. Big down days, and then these up days have no oomph to them. So you go, and then it tries climbing and fighting back, and then gets sold off, climbing and fighting back. And then we've got a bearish engulfing. Bearish engulfing means that you want to head lower, especially if you look at how this is going down. Let me get all my my awesome drawings in there. If you look at how this is going down, you get this basically this large impulse move lower, and then you get this small consolidation up. Large impulse move lower, small consolidation up. Large impulse, and then you're seeing a contraction to a point of a bearish engulfing. It doesn't look good, guys. It looks like we could potentially head lower in the S&P 500. Now let's look at, and kind of if you step back a little bit, you can see this thing, it's a rising wedge that kind of went right up into a bearish engulfing pattern at the top there. And there's another one here. Those stack up. See, you don't see anything. You don't really see too much in here. You got one here. It started here. And then had one last push. And then a little less push. Now, one thing, if you're looking at technical analysis, you want to look to see if there's a contraction in the upward movement. It means that the buyers and sellers, that the sellers are starting to outweigh the buyers. So the buyers were strong off this bottom. Came up, and we went all the way to about here before real kind of any sort of pullback. It wasn't really much. Here's your pullback. And there's a little one here, a consolidation period. And then we had a small little move up, pullback. Small little move up, pullback. You see how that's contracting the buyers and sellers there up here? This is a move here, a smaller move, a really small move, and then it busts out. And then the downward movement is larger than these up movements up here. It all means something. It means that we're turning around and it's gonna go to a pullback. Looking at the NASDAQ, it's got the similar thing. You've got a squeeze up into the corner, and what do we have? We have a throw over top with a bearish engulfing pattern. A bearish engulfing means that the opening and closing price of this stock engulfs the ones before it, leading to a downward move. I mean, it's obvious after it happens. And what I'm looking for is I'm looking for bullish engulfings where in patterns that are bottoming. It's the same thing reversed in topping action. So when you guys are looking for tops, this is what you want to look for. You've got this big, nice move up, consolidation, big move up. See how the distance between the top and the bottom of this move is large. This one's pretty large too. You get into a consolidation, then you have a smaller upward move. The distance between this is smaller, pullback. Then you get another smaller move. Do you see that contraction? The distance between this, the bottom and top of these distances are contracting in size. And then you run right into a bearish engulfing and then another bearish engulfing outside of the pattern, outside of this support line. This screams it wants to go lower because the contraction, the buyers are starting to equal the sellers on these impulse moves higher. They're contracting to basically equal each other. Then they throw right into a bearish piercing patterns or bearish engulfing patterns. What I mean by that, a bearish engulfing pattern is when, and I just want to make sure you guys understand this, it's when this candle is the opening and closing price of this candle engulfs or it surrounds the opening and closing price of the candle before it. It is a reversal candlestick pattern. You see them all the time at the tops here, very similarly. And what we're doing is that we're seeing it. This is one here, and this is one here, and they stack up, and they're going to blow us out of this pattern, which is a pattern that is contracting in its size. And the impulse moves are also contracting as it goes up, leading to a move that's going to blow itself to the downside. So we blew out of this. Now, this thing isn't going to just go straight down. It didn't go straight up. We had consolidation periods. So you could consolidate, or it can go down and consolidate and then go down further. It's a consolidation period that's going to take time to work its way out, is what I'm saying. So that's what it looks like, guys. It doesn't look great. If we go to the daily candlesticks, what do we see on the downside here? We've got a big kind of move. Give me this one. Big move, a little bit smaller move, a little bit smaller move. It is contracting, but we got this bearish engulfing. We'll see if this thing heads lower or if it tries to work its way out, and consolidate more. But I would not be going long in this. This doesn't look to me like a long. And then we're going to see this across everything. Here's another thing that I see here. Let me get some of this stuff out of here real quick. You can see that we went up. This is a consolidation pattern. I bet you if we back out, it's got a you see here, coming on up. I probably had a trend line on logarithmic. That's why. We're coming on up. We've come on over. So on the top here, we're looking for bearish engulfing patterns or piercings. What I see is bearish engulfing, bearish piercing. That means, man, we could head lower soon. And it was just the sellers were leaking out. They're getting tired. And then boom, we started heading lower. Then we've got a high, and we have a lower high. Now we've got a lower low after we broke through this. Now we've got resistance coming back up, and we just keep falling lower. But we do have a change in the candlestick patterns down here, right in this section. Like we're going to take a run at it to the upside. Sellers are still here, bearish engulfing there, sell off, and then the buying pressure is less than the selling pressure. It's probably going to roll back over. So that doesn't look that bullish to me. Looks like Apple wants to roll over too. What I'm looking at is the highs. The highs are not coming. They're getting lower highs. Now we've got a lower low. It just broke out. It's probably going to go lower. To me, that doesn't look that great. Amazon. Looking at Amazon. Yeah, it doesn't look good either. Have a topping channel where the momentum, got good momentum coming up, sideways momentum, and now the momentum's coming back down. Trying to make it quite obvious. You move in here, we've got the breakout lower and then the back test. We know that from going long in commodities. Now we've got a bearish engulfing and another bearish engulfing. That does not look good. This is trying to hold. This line's trying to hold the sand. And if it breaks through that, I think we're going to go lower. And it looks like it's trying to do that. I would not be, and I don't short these things, guys. I just go to where we've got large asymmetric bets over in commodities. There's no point, in my opinion, to be over here with the chart patterns looking like this. And this thing, I mean, that doesn't look good. You went from $385, higher low. It blew out of this guy here to the downside with that earnings. And it's not really recovered since. I don't like the way this chart looks at all. It's probably going to take a while for this to recover. That was Facebook or Meta platforms. Now this guy, oh man, this doesn't look good. Man, I'm good. I like my chart here. So here's your kind of rounding top. They had an earnings release that blew it higher, but the market conditions do not support this stock. You can put out good earnings. And remember about the fundamentals. And people say the fundamentals move companies. Well, their earnings was great. And look what their chart looks like. It looks like garbage to me. So we have this rounding top. We've got bearish engulfing, or piercing there. Bearish engulfing, big down days coming through. It blew through this support line. It had one last hooray for the earnings. And then we've got another bearish engulfing here. That wants to go lower, guys. And if you blow through this down here, you're done. It's going to go lower. And that's what I see for Google. That's Google. Baidu, man, Baidu's struggling. They are struggling. Here's your support line, blew through that. Now, I haven't looked at this in a while. Nice big move higher. Doesn't like it. Came on back. We were in this large consolidation pattern. It tried going above it. You could see the big wick at the top. Topping patterns like wicks on tops. They love these big, huge wicks. That means that you're probably going to reverse and go lower. Because what happens is you trade it up and the sellers came in and sold that off hard. And then you've got the big bearish engulfing right next to it. This is on a monthly candlestick. Big old bearish engulfing. This screams that it wants to go lower. See all these wicks at the top? Those wicks at the top are, it's basically showing you that there's a bunch of sellers up there, a bunch of resistance. And when you look at this, this is how topping patterns work. And now we're getting lower and you got good support down here. You break through this support, it's going to be ugly if it breaks through it. Visa, let's look at Visa. That was Beidou. Yeah, on a logarithmic, it looks like that. We can stay on log, it doesn't matter. This thing is pinching up in a wedge that's rising and pinching up. It wants to break to the downside. We zoom into the daily candlesticks. Here's your bearish engulfing. It's showing up again. It broke out, and then it's doing this back test move. That's a return move. And now we're getting more selling pressure. And now we'll see if this selling pressure continues. I think it will. Increasing interest rates. These companies, what they did is they priced in super low interest rates, and their PE ratios blew up to the upside. And that's how we got this large out of balance money flow, because everybody went into stocks. This is all going to have to rotate out. That's what the ratios tell us when I look at the Dow Jones Industrial Average to gold, the S&P 500 to commodities. Doesn't really matter what I look at. These all have to unwind. This money is fuel for the commodity sector to do very well, and the precious metal sector. These are all topping patterns. You can see it rolling over, lower highs, lower lows, resistances that are starting to break to the downside. Or I should say support levels that are breaking to the downside. And we're seeing it in all of them. They all have this. Here's MasterCard and its little megaphone type pattern here. And it looks like it's rolling out. It broke out of this, squeezing up, and it's going to roll over. We'll see. We'll see if it rolls over. The trade desk, oh man, you can see the selling pressure continuing, 9.88. So we came all the way up. We did a little consolidation. Now, what I look for momentum. Momentum was coming up, sideways, and if we break this trend line, lower. And with increasing interest rates, I don't see how that's not possible. And then we look at the top here. We're looking for, here's a bearish engulfing there, bearish engulfing there. I mean, there's some bullish piercings and stuff. The buyers did they gave a fight. It's about all they could do. And now we're getting some increasing selling pressure all through here. When you see these big down candlesticks, and if you notice on the left-hand side, you don't have these large down candlesticks. You get them every once in a while, which is fine, but you don't see a whole bunch of them. It's mainly large up days and small down days all through here. And then you'll see a change where you start busting out large down candlesticks everywhere. They just start coming out of the woodworks all over the place. You see a change in that large selling pressure to buying pressure topping pattern. And if you notice, this thing didn't like just top and completely blow out. Its momentum is slowing. This is a big long-term paradigm shift. So this is a topping pattern. I would be a seller I would probably be a seller all through this entire section. And the commodities, and in all fairness though, I probably would have sold even on the way up, because your risk reward is done up here. It's going to be all done. And if you have bottoming patterns in commodities, I would be swapping them all through here. I would be a commodity buyer like no other in here, which I was. So that's where I got out. And people always say, well, how do we have an exit plan? This is the exit plan. I just exited my stocks in 2020 and in that area. Some of them, not all of them. I still own some healthcare stuff and whatnot, but this doesn't look good. And Roku was one of this is one of the all-star movers. And I owned a lot of Roku. I bought it at like $30, like a whole bunch. Was it like down here? And I rode it like all the way up to, I don't know if I didn't ride it all the way to 490. I think I got out of it. I don't know. I got out in 2020. But I went from like 30 all the way to 100 and something dollars. And then I got out of it and bought a bunch of commodities with it. But this thing looks like it's rolling over. It does not look good. You got your high here, lower high. Oh, Jesus. Your high here, lower high, lower high, lower high. The lows just blew out after it blew out of that thing. Boom. A little bit of a return move. heading lower. This does not look good at all. That's what a topping pattern looks like. So what is an exit strategy? Your exit strategy, I just went over it. That is what we just looked at the overall stock market. Increasing interest rates, this does not like it. It's rolling over. It's going to fall over and probably continue. And if we have an increasing interest rate environment, I think this will continue lower until I think that we have a change in inflation, which is a change in the housing starts. That's what I've seen in history, and that's what I'm sticking my guns to. If you guys want to join the website, I actually go over, not exactly this, but I do go over the cycles. And you can see all the cycles, the long-term credit cycles, the real estate cycle, and how this ties into these charts that I just went over. And then I also go over a large commodity super cycle chart there as well. And right now, they're all lining up for commodities, every single long-term chart and cycle. So hopefully this doesn't, reach you poorly if you're in a bunch of stocks. I'm sorry about the bad news, but I like commodities right now and precious metals and real estate. That's what I like. And I know a lot of people, they're going to fight it tooth and nail. Real estate's overvalued, it's this and that. It's like inventory, guys. And maybe I'll go over another clip talking about inventories. That's what drives these markets. You can't go down with no inventory. I'm sorry, you just can't. If you guys like the content, give me a thumbs up. Subscribe to the channel if you haven't already. And thank you for listening. This is Finding Value.